Good morning, everyone. Good afternoon. Good evening. Welcome to traders around the world. Welcome to Trading with Z in this market morning right here on Wealth Charts and in the active trader room. I hope folks are doing very well. Looking very, very much forward to navigating markets, bringing things home strong into the end of the week. Had some good trading already done in the pre-market. Traded the jobs print as well. It was a little bit like a lottery ticket, but I did a one contract Nasdaq E-mini trade, and it ended up being high triple digits. So I'll share some of those results with you, of course, and I want to attack the morning. You know what? For those of you that have had a chance to already watch some of the videos I put out this morning with Day Trades Delivered or the Trader Funding Hub or the strategy video in the Active Trader Room, you'll already get an idea of where I think that we were going to come up to and what we need to sustain above in order for this market to continue pointing up. And I already provided a view in advance of the jobs print, that I think that we're going to see the jobs print come in weaker, which should then encourage what? A stronger euro, weaker dollar, more of a glow up on precious metals, and equities get a benefit from that as well. Now, some of that is being retraced back down. So we've got to, of course, be careful with where, how bullish one wants to be with negative jobs, right? There were jobs that were destroyed, and the prior month jobs data came in and was adjusted lower as well. I think we printed negative 23,000 jobs on stateside. And then the prior month was reduced from roughly 60K down to 20K. So it's not an environment where we're seeing, the basis for more consumption coming from more employment. What does that do? It might seem a little backwards, but what it will do effectively is encourage monetary policy to become a little looser. Now, whether or not the warsh is going to do anything about it or not, we'll yet to see. All right, folks, give me a get to go everywhere. Let me know that you are ready. I hope folks are doing very, very well. I can't wait to tackle this market day with you and bring the week in strong. Looks like the AV is all good to go. So I am good to go. Everything that I do and say here, folks, is for education and insight purposes only. It's not meant as advice. I am not a registered financial advisor or representative. You must consult yours before making any trading decisions. Trading involves risk, not just reward. Risk of loss. Trade with money you can wholly afford to lose. When I trade, it's always in line with my risk trading plan, which is unique to me and might not be suitable to you. Consult your registered financial advisor and get a risk trading plan. Whether I'm discussing past trades taken, doing live trades in front of you, coming up with plans and projections for future potential trades, whether I'm doing so with respect to a live cash account, a demo account, or a prop trading account, it's all done for education and insight purposes only. It's not meant as advice. Finally, if I poll you in the chat and I give you an average response back to the poll, the sentiment there is not necessarily indicative of the sentiment of the entire group, just those responding. I don't audit the chat, so do take that stuff as anecdotal. All right, that was a mouthful. Let's get right into it, folks. So I'll start off by just sharing some of the results from the pre-market trading that I was doing. So I wake up early. And I wanted to, just share with you. Let me just actually do this without having all the account numbers all up there. So give me a second. I'm going to pop that back up on your screen in just a second here. Got to keep some privacy, right? So let me just do that right now in the backdrop. I'm getting that done. I think I got it there and there. Okay, perfect. Okay, so here you go. I'll pop it back up on your screen. So that's my daily P&L so far, just north of 1832. So I traded one FFF account, a couple of other accounts. And one of the trades was like a lottery ticket type trade where I was sitting with a limit buy order, not manual, and getting ready for the jobs print to break positively. I didn't have it execute right as soon as it broke. Shortly thereon after, as soon as I got the data and I understood that it's likely going to be, such a big miss, such a negative print and revision from the prior month, I decided to put that trade on and up and away we went. I think that delivered about, just over $880 on a one contract NQ trade, which is pretty cool. But where are we going? Where is this market going? So let's just back up the truck a little bit over here and get a sense of where things are at. So I'm going to get that going for you right now. I'm going to take you to on just a little journey of some of the things that kind of tug at the market and provide a couching for the market, like a tailwind or a headwind. So there's more of a tailwind from a currency and rate standpoint because of the weak jobs data, right? So for those of you that might be new and don't understand what I'm saying, you've got high rates right now. The new monetary policy head, the FOMC head, wants to be more opaque. How's he going to make decisions? Well, they need data. If the data show, and they have goals, full employment, targeting a certain number for inflation, who, God, goodness knows, is it's 3%, 2%, 4% now. In any case, he stated, we're going after those goals, we're going to make it happen. Well, full employment is not going to happen unless the stock market's rising. Full employment is not going to happen if cost of credit is dramatically more expensive than what jobs being created tells us tells us people can afford. So we're not seeing jobs being created. Credit is expensive. Bad jobs print comes out. How does the market react? It sells the dollar down, sells rates down, bids the euro up. That's a mechanical outcome. And then there's a waterfall effect of other things. So the euro has certainly moved up. You can see that right there. It's up about almost 0.4%. And what you heard here at the beginning of the week was this is the week that we're likely going to see silver and gold start to glow up. If you remember that from Monday morning, give me a lucky number 7 in the chat and let me know. Right, because this has been that week, and I shared it with you first thing this week. You can see it on the videos if you want, however you like to look at it. I did not know that would happen for sure, but I did know that we are in a late stage downtrend and a bottoming process with the potential for a weakening dollar to support a rise in precious metals. So looking at the technical pattern on the euro, it breaking out of a downtrend, looking at the technical pattern on silver and gold in a bottoming process after a late stage downtrend, the two intersected to create that insight to start off the week. And silver is up, well, right now about 4.5% on the day. It's up just over 14% from the lows on Monday to the highs that we see in intersession today. So a pretty incredible move. And George, yes, I am holding you to remember Monday. I'm holding you to remember Monday, and I want you to remember what shirt I was wearing on Monday and what color it was too. All right, how about that? Okay, so and gold, and yes, we know it's a black T-shirt. Oh, okay. Now everyone's writing in. Obviously, yes. Okay, so there's Monday on gold. Gold has been up about 8% from the lows up to the highs. And in today's market, up 2.5%. Now, for those that are in swing positions on precious metals, right? I came out and qualified a couple of key lines to look at day trading long and then holding it long. For gold, it was 41.35 and then 42.35. So 42.35 was the volume point of control line that I'm pointing to over here, but getting it going during the week was 41.35, and it did get going above 41.35. Yesterday was a pause day, which makes sense. You know, we had some geopolitical risk erupt yesterday. It was not dramatic, but it was enough. And it came at the exact time where we got this very overbought condition in markets starting to work itself out, especially on the NASDAQ. So that was yesterday on oil, CLU, the September contract. It was up 2.75 percentage points. It's roughly unch to slightly down at this moment in time. But we've already had a dramatic down in oil this week, and we're waiting for more talks. And of course, Strait of Hormuz is sort of open, whatever that means. Bottom line is, the geopolitical risks are still going to affect market moves, but the theme for this market morning is geopolitical risk will weigh heavy on the market. Jobs are not working very well. Monetary policy has to come in and support now. We've already gotten through the majority of earnings. There are some earnings plays that have done very well and helped kick the market up. There are some this week that didn't do very well, SpaceX and AMD, for example. And for very acute and specific reasons, like SpaceX's float was increased, that kind of thing, share float. Alphabet came to the market, not that it was presenting earnings this week, but it came to the market offering more, selling more debt so that it can finance its infrastructure needs. At the end of the day, you're in a marketplace where now you're not going to get a tailwind from the major earnings plays. Yes, we've got NVIDIA. It's at the end of the month. I think, Mike, you were saying it was around the 26th of August. So it's near the end of the month. I don't think the market's necessarily going to be holding up for that, but the market has gotten a tailwind today. It's been pushed up. We've gotten above some key levels. We've traced right back down below some of those levels, but the technical signals are actually pretty darn good. Now, I'll get oil off the screen over here, and let's actually go look at the equity indices, right? Gold and silver are interesting. I just want to dot the I's and cross the T's on this one because this is a stretched area. If in today's trade, we are able to see silver close closer to its highs and or around the 65.50 penny marker, it is more likely that Sunday night, Monday, we're going to see indecision, slight red before continuation in the front half of the next week. Now, I don't know if that continuation is going to take us up 69 or 70 bucks, but the technical pattern is one of a breakout. Now, if it happens to be that silver comes down today and finds itself below roughly $63, I would be very careful with the holding, because it will probably come all the way back down into the center mass of the indecision print from yesterday before it can bounce again. But this is a breakout in earnest. Okay, same sort of thought process on gold. So if gold is able to close near its highs today, and in this particular case, I would say at a bare minimum above 4,400. Okay, just that round number, 4,400. It's able to close there. Don't expect it to reach for the stars Sunday night, Monday morning futures. Expect indecision to slight red. However, if gold finds itself coming down below roughly 43.40, 43.50, we've probably got some issues where we're going to pull back somewhere into the center mass of the indecision print yesterday before we attempt another bounce up. This is a breakout in earnest. There's nothing to be misconstrued about the chart. Okay, let's move on from here. I'm not really focused on trading oil. It's just being used as an indicator. So let's get right to the equity indices now, as we're just a few minutes away from the open. So we know that the primary market, the S&P E-minis, have been in this long-term uptrend channel. And this goes back to October of 2022. We're in the uppermost quadrant of that long-term uptrend channel, which is the performer plunge quadrant. We're far away from normal being the center line in this linear regression channel. So if we don't perform, we plunge. Did the jobs print actually do something good and support the economy? No, it created a temporary dislocation, right? Because we've got high rates and they're probably not going to be able to keep rates high. They probably have to take them down, but it paved a path for a move to potentially the highs that we saw a couple of days ago in markets on August 5th, which was around 78.20-ish on the ES. Let's zoom into the hard right edge over here on the ES and get a sense of where we're sitting. So here we are. You can see that the S&P E-minis are currently up just over 0.25%, just shy of 1/3%. It's a bull flag formation. The number that we need to get above and stay above, to really open up upside is 77.70 to 77.75. But there are some minor water lines here that I've put in on 5-minute charts, and they just superimposed here on the daily. So I'll just communicate it here. 77.52, which we are 5 handles above, and then the next water line over here is 77.60. So if you're an ES trader and you're thinking about long side moves out of the gates, we do have a little bit of a give back after the pop from the jobs print, but 77.60 would probably be the better number to have noted. Above there, we're probably going to try to come up to the highs of the session and higher. If we come down below the lows from yesterday, today, which are roughly in the same area, just call it 77.25, there's probably going to be some trouble. And that trouble is potentially going to take us into the lower half of August 5th's range. Okay, so below 77.25, warning, a break below 77.05 to 7700, we're headed down into the lower half of the range on August the 5th, very likely. Okay, but I don't think that that's the way that we're going to play it out. I think we're going to try to bounce back up again. So how do I get that insight? Well, let's go cover the NASDAQ off first. So here's the NASDAQ. It's in charge. It's large and in charge. It's outperforming the ES. It's above a key water line, roughly 29,500 to 450. If we come down below 29,450, there's some dragons below. And we could end up seeing, lows from yesterday tested or lower lows than that as well. So watch your back below roughly 29,450. On the upside, there are two numbers that matter: 720, 29,720 and 29,850. So we're near the first one right now of the two. We've already been above both. So that's a good sign. We paved a path, right? The whole point of the jobs print coming out the way that it did poorly, which we were expecting, was that it can create that pop and give us an opportunity for the path to be paved for something better. Okay, so now markets have just started trading. I've got the NQ in here. I'm probably going to trade the MNQ. So I want to just get that in on the screen and make sure that I've got that set up right. So that'll pop up in just a second over here. While that's happening, I'm going to just take you, it'll be quick, but I still want to just bring the ES onto the screen over here very briefly, the primary market first. And the good news is we're still in a buy signal state on a daily chart. We're holding above the fast and the slow speed line on the daily chart. We're in a buy signal state that is still robust. The 4-hour chart's in a resumption buy in an expensive area, but it's in a resumption buy. And the hourly chart, which matters more to the day trader because it projects out the next 3 to 6 hours, well, it's in a buy signal state. We can see that from right there. But we've retraced the majority of the up bar from the 8 a.m. bar, but we're coming down into rising support, which is the support of the speed lines. We've tested both. We don't really want to see action below 77.52. I've already given you that as a water line. Right? We don't want to see action below there. And if we go below there, the risk is coming down to yesterday's lows. Coming down to yesterday's lows is not a good thing because that'll open the door for even lower lows down to the 7,700 area. I don't think that that's going to happen because right now we're still holding rising support on the ES, on a 5-minute chart. And the 1-minute chart right now is in a sell signal. It's a little oversold. I'd like to see action get back up above that 77.60 area, and then I can actually take on a long side trade. Above that 77.63-ish area, not 60 flat. So I'll consider that. I'm not going to take it here while we're rising into the falling resistance of the MSR channel. And let's get the NASDAQ on the screen now. So here we go. Okay, so that's encouraging what we're seeing right now. The line that I wanted to be above was the champion trend sell zone trail line on the hourly chart, which is at 29,720. So we're well above there. We're trying to rise right now. I am going to take on a long right now. I'm probably going to do it with 2 contracts. So I've just bought a couple. The position timer's in. And we've broken above resistance of the 1-minute chart's MSR channel. We're above the champion cross buy zone on the 5-minute chart. I don't want to be cavalier about this, right? I want to keep what I've made on the day and build on that. But I'm showing you my first trade. Looks like it's profit positive. We're well past the 10 seconds. And guess what I'm going to do when I have profit? First trade of the day, live in front of you, 2 micros, $60. Did anyone catch it? Let me know. There's more here up to the 850 area likely. It looks like a few folks have caught it. That's amazing. Wow, lots of folks caught it. Well done. Well done. Vinny, nice to see you here as well. Amazing. Well done. Emma, you're still in it. Manage it. It's still going. Can we just shoot right up to 850, the negative momentum shift here? We could, right? I'm seeing the NASDAQ try to pull the ES up. I'm still having a little struggle on the ES. That's a problem. So I'd rather not ride it. I'd rather put the floor in, put the floor in at 800, put the floor in at 805 even, and then look at re-entering above 820, 821. That would be the idea. It's valid to stay long if you can afford the risk down to the base of the bar, but why give that up, right? Why give that up? The interplay between the ES and the NQ is what I'm looking at right now, which is causing some issue. And I'm really waiting for the ES to get above its 1-minute chart MSR channel, right? It's in a sell signal state. It's trying to get above there. It's not there yet. The NASDAQ's trying to pull it up through there, but it wasn't successful on the last close 1-minute bar, right? We got up to the top of the 1-minute chart MSR channel and then wicked down. All right, so we're trying to get out of this sell signal state on a 1-minute chart. Right, the 1-minute chart is in a sell signal state. There's your down triangle. Right, double red dots are there. It's not a PTC pattern or anything like that, but it's a sell signal that we're trying to evacuate, and we haven't done it as of yet. So one wants to be careful, right? If the ES is not able to get going here, because the ES is going to face the is going to face the weight of the poor economic outcome from the poor jobs data, more so than the NASDAQ. The ES has got more balance, and more, positive correlation with all 12 sectors of the economy. If we've got bad jobs, it's going to affect it more. And that's what is likely happening right now. That's what's likely keeping it dragged down. And it's hurting the NQ, right? The NQ's in earnest trying to shoot back up, but we got a problem, right? It's trying to shoot back up, but we got a problem. So, Freddie, that's a good point. There's a lot that goes into identifying the levels, the targets, the likely moves. Which way is the wind going to blow and hit your pinky toe in the next 10 seconds versus directionality. There's no easy way for me to tell you exactly how, but it's for you to learn how multi-time frame and the technical toolkits work together to give us projections. And give us likely outcomes. So it's a process from macro down to micro. So I want to look at the technicals on the major indices. I want to look at the things that the major indices are tethered to, like this morning, how important rates and currencies are, what the ramification to sectors that will benefit from a risk event like jobs print, like gold and silver. I want to have a robust understanding of the entire web, and then I want to be able to pick a spot and go. Okay, let's go. Right now, we're seeing the ES really hemorrhage. It's down to 77, 52, 54, 55. If we come down below 52, we've already discussed this, right? We've got a plan. If we come down below 77, 52, the door can open for a drop that takes us down to at least initially 45. This is a big turn in events, right? So the commentary that you're hearing from me is this is probably driven by the ES poison pilling the move, because it's going to have more of a negative impact from less jobs being created. It's got more balance in it, but we still have not come down and broken 52. We've done the work already. 52 is the number. If we come down below 52, the hourly charts MSR channel center is 45, and then 40 roughly would be the two local areas we're coming down to. Do I have permission to short it? Technically, I do, but I'm going to wait for my level to be crossed because it's a volume profile level, meaning if we get under that hump, let me just take you there right now, see if I can pull that on the screen in any decent way. Right there. No, it's changed. It's the center mass has changed. Oh, no, there's a node there. There's a node there. It's more of an inflection point, and it's changed to about 50 to 51. So we have not come down and broken the thing that opens the door for more down. Okay, so that's good news. We've seen a scare, but not a tear, right? We've not seen this come down to the point where it's gonna, snowball, for example. Okay, so that's good news. That means that if the NASDAQ wants to pick back up from here, which it's trying to, I could try to trade it long. I don't want to trade the ES long. I don't really want to do that at this stage, right? If they start buying the ES and it starts leading, I would be surprised because it's going to have a bigger negative impact from less jobs being created versus the NASDAQ. So if I'm going to trade along, which is what the hourly chart is signaled as, it's in a buy signal state. The 5-minute chart's there as well. The 4-hour chart's there as well. If I didn't mention it, and if I didn't mention it, the daily chart did go into a champion trend buy zone, right? The buy zone plaques there, signals there as well. We're not fully ready to grow, but this is still encouraging. And I'm looking at taking on this trade not above the MSR channel. No, thank you. That's a trap, right? My indicator has got a down triangle. Double red dots are there. We've got wealth charts giving us that momentum shift that's negative. Red ball underneath that triangle, white line. Breakout above 810, and then I'll join the trade. For those who have taken it off of this low, okay, kudos to you. Just be very careful because we still have not seen the ES come up above the top of its 1-minute chart MSR channel. So it didn't break the things that matter at this stage. And I think, Min, you quoted that in the chat, right? It didn't break the things that matter, down here, like really 77.50, but it's still not above the top of a 1-minute charts channel, which is weak. So it can still drag the NQ. So this is not a good pocket to trade. We had a nice little run up, right? I didn't take the short because we're still in a buy signal state. In terms of the backdrop from a daily chart to a 4-hour chart on the NQ to a 1-hour chart on the NQ, we're still in a buy signal. And a 5-minute chart, we're in a buy signal state. So I want to give benefit to the objective high-powered technical tools until I know that they're converting to the other side. So I don't know that yet, but I know that the ES is weak. I know it's adding a drag to the NQ. That's for sure. Well, Danny, can I read that out to the group? Danny Z, can I read that out to the group? Because that's That's awesome, right? That's something great that I'd love to share with everyone else. You let me know if I have permission, I will. Okay, so Danny writes to me, thank you, ZIAD. These morning moves lock in really great profit in such a quick amount of time. That's all I need. Done. It's amazing. One trade and done for the day. Right? That's the message. That's amazing. I'm happy to hear that. Now, I love trading, so I probably will do more trades than I would normally want to if I was sitting here alone, because my role is a role where I'm trying to find as many credible opportunities to take a piece of the market, make sure I grade it, give you an idea of where I think it's going and why, and then execute as many of them as I can. I might not ride them for very long, but I'll bring you right to the area where I think the execution is right. And then one thing you should know about my approach, if I take a trade and if I don't see within the first few seconds profit in my account, that trade is not likely going to work out. So make your mind up very quick, right? And that's a good point, Danny. I'm guessing you're okay with me, discussing that back. In the past, like if you sit there the whole day and you've got this, if you're behind the 8 ball, if there's any emotional dissonance and you're spending time, just trying to work that off by trading, it usually doesn't work out, right? We have to just disconnect, let the chemicals kind of get back down to neutral, and then approach it again, right? It's a hard thing to do. Waiting and patience is hard, especially when you've got that burning feeling inside. You're like, how could I let that happen? Or, wow, I did this, I can do more, right? Both of them are not good. Both of those extremes are really bad. Now, we don't need to be robotic. We can be passionate about it, but we need to be objective. The way I like to say it is, I don't want to be a bull. I don't want to be a bear. I want to see what's there. And right now, it's sloppy. The Nasdaq's threatening a break below champion trend buy zone. I could scalp a short. I don't want to do that, though. I don't think it's necessarily a great idea. If I saw the ES down below 50 or 52 even, sure, that would encourage me. Otherwise, up. Exactly. Fuad, you're making me hungry. It's one of my favorite sandwiches, Sloppy Joe's. I've never quite got it made exactly the way that my mom did, though. She was the type of lady where she was a furnace for the whole family, and people would come from like different cities to eat her cooking. I didn't know how lucky I was, and then I realized how lucky I was. I've been trying to match it for a while, and obviously other dishes, but it's very difficult to replicate a mother's love in that food, especially with a barbarian like myself. So I want to see if the long here starts, because I'm seeing the ES take it up. We're above the MSR channel on the 1-minute chart. This is encouraging. I'm going to try an entry here, okay, with 1 micro. And I'm going to look at adding to it if we get above the next negative momentum shift, which is sitting up at 810. If we come down anywhere below the low of the actual bar here, I want to get out of the way. And if we do what we're doing right now, expansive move up, I'm going to take profit. Because really the trade that I want to be in at this stage is the one above 810 to trade up to 850. And then really the trade I want to be in there is way above 850 and just keep going. And I don't know if we're going to get that. But what's good news here is that was another profitable trade. Good news. And the good news really is the ES is now above its 1-minute chart MSR channel top. So it's in a retrace that actually has some legs. You can see the tail on the candle on the 1-hour chart. So this is good. So the question should be, should I try it here? No, I'm not going to try it here. I'm going to stick with the NQ. It's a stronger market in general, well, specifically. And I could take it again here. I'm just going to take it above that negative momentum shift. If it comes up and and that was a bad behavior on my part. I chased it. I was like, yeah, it's going to break it, breach it, and I'm paying the consequence for it. Now, do I think it'll pop back up? Yes. Should I hold it with a $73 loss on 1 micro? Yeah, well, goodness sakes, I'm happy it's a micro. The ES is back testing support. This is not good. I'm out. So we poked above, got whack-a-mole back down. Can I repair that? Yeah, it's not about trying to get it back on this bar though. But if we do accelerate back up towards that negative momentum shift at 810, yeah, I'll take a whack at it. As long as the ES is maintaining above its MSR channel top on a 1-minute chart, 5-minute chart, sure. So far, it's sketchy. It's not doing what I need it to do perfectly. And look, there could be role reversal here where the ES takes over, NQ's weaker. I don't think I've got enough data that tells that story to me. So no. And it's, Fuad, did I not just do the same thing? I did the same thing, right? I chased the breakout here, right? I had an inkling that it was going to come up there. The first trade up was good, and then the second trade just killed me. And I'm not going to go in and revenge trade a short or a long, right? I'm just going to wait. So it happens. And now comes the question of, is direction changing? Is direction just consolidating to go up in the existing buy signal state that we're in? The ES is giving me some headaches still. It's still holding in the upper half of its 5-minute chart MSR channel. We're back in the channel on the 1-minute chart. Sell signal has not gone away. The hourly chart still holding above the fast speed line, 77.60. I think we're going to make a run for the move up here. I think we're going to make a run for that up around the 810, 820-ish area. But I don't want to trade inside the slop of a technically, we're clearly technically damaged, right? That's one of the things that got me. Above the channel top, I consider it. Just want the ES to not poison pill the move. I'll tell you right now, if I take the trade above the top of the 1-minute chart MSR channel, it's a C- grade trade. It's the lowest grade I can give. If I take the trade up over here, it's a B+. And if I want to take a C- grade trade, I better be willing to pay. So I'm in. And the cost is down to the center of the MSR channel. That would be the native basic risk, or all the way down to the bottom of the MSR channel, which is at 730. Okay, so I've entered in. I've let you know the grade. I've let you know that this is not a high grade trade. And if I come down to the center of the channel and breach it, depending on what I'm seeing into the interplay between both indices, I may decide to keep the trade. I may decide to get out, and I will share that with you live, of course. You've got this setup where you've got the champion trend, champion cross, buy, triple S, sell, but trying to evacuate the sell. And then you've got the ES still more, subjugated by the bad jobs print, but not yet unraveling. It's not down below the 77.50-ish area. It's trying to build a base to go up, which is what the backdrop says. Is likely that we'd likely have another attempt up. So a retrace back up towards the highs generated from the jobs print is the real theme here. And we'll see. Now, I'm not seeing it work right now. The trade that I'm in is not really doing a whole bunch. We're still choppy in the channel. I took it right as we poked above the top lip of the channel. I said, I'm okay with the risk. I'm okay with the risk. But I want to take the trade, build the trade if I get the opportunity to, above the negative momentum shift. And if it's going to keep taking longer here to get out of the channel and bust up, that's problematic. The ES is trying to get up off its feet. It really is. It's having some struggles doing it, but it's trying to get up on its feet, put its long pants on and go. So it's trying. I'm not counting my chickens yet. Obviously, it's in the red right now. It was in the green a moment ago. But we'll see. We'll see where this goes. In these moments, right, I'm sitting here demonstrating I'm in, right? I'm obviously going to risk manage myself out if it's not going to work, but I'm giving you that raw and detailed bias that I think we are going to try and retrace back up towards the highs generated from the jobs print around 8:30. So far it's working. I want to see if I can get it working some more without, these kind of slips. I also want to P&L manage myself here, which I'm getting very close to wanting to do at this stage. Yeah, I'm taking some profit, right? Because I had a little loss. Now that puts me, behind another level that I'd have to get up above to want to take the trade again. I was in the trade for, several minutes or more, and I was not seeing it reach escape velocity. And I know I've got challenge levels above. My decision was really generated by the fact that the ES is not launching. The NQ can just whip right through that, as we saw. The ES was starting to stagnate. It had 2 1-minute bars that looked pretty darn good. Volumes actually were not good enough on the second bar. And we had a little back test and a push up, and we still didn't launch higher. We still didn't. Now, can it resume? Yeah, I think so. Right? If we get above 77, 68 and a half, yeah, we're probably going to keep going. We just need to watch to make sure that the NASDAQ doesn't start to lose its footing, right? So it's still grinding. It's holding the speed lines on a 1-minute chart. It's holding the speed lines on a 5-minute chart too. But obviously we've got this local negative momentum shift high to get above. Okay, so there's 800. I could re-enter the trade at 800, or I could just be patient and wait to see if it can grind its way up and above 820 and then join the move at that point. Right, so that's probably what I'm going to do. The latter. Wait for it to get above 820, and the opportunity might actually present for a long on the ES. Like I'm seeing the 1-minute chart so close to getting ready to give me a buy signal. So I'm waiting 68 and a half. We've gotten above it. I'm trying an entry right now on the ES. I just hit the button. Just share that with you right now. So I'm in. Okay. I'm not seeing it continue, but I am seeing the potential here. Fingers on the trigger to get out if it takes me back below the slow speed line. So I'll have to watch that. What's the NQ doing over here? What's the NQ doing? It's dragging. It's back to the bottom of the channel, in the bottom half of the channel, but it's not submerging. It's not submerging. My ES trade is still alive. I'll let you know what I do with it, of course, before I do it. My entry was at 69. So I'm still waiting patiently right now to see if I get something out of this move, if it can actually struggle its way through, because I preempted a long on the ES on a 1-minute chart before we converted to a buy signal state. We were seeing something incrementally bullish on the 5-minute chart. We were seeing the ES grind up through on the triple S indicator through its fast momentum line, back test it and bounce up. So I was comfortable with it. Still, I'm okay holding it. It's not in the money. And the NASDAQ's just chopping around. Now we're getting very close to the end of the hour. End of the hour dynamics data at 10 a.m. I don't think we've got any significant data. We've already had data that's important priced into the market, which is the jobs print. So I'm not really seeing any great opportunity at this moment. I'm not really seeing it, want to be become destroyed and roll over just yet. But think about it this way: the longer it takes to retrace back up to the pop that we've already had, the more disinterested longs are going to get. So let's see if the NQ can get a little perkier here and perhaps get back up above the top of its MSR channel. If not, I'm really counting on the ES pulling it up at this stage. My trade's still alive. It's not in the money. It's out of the money, but it's still alive. So I'm still managing it. I'm going to leave the NQ on your screen. I'll let you know what I do with this trade. This is a problem, right? This is a problem. The NQ drags things down and ends up coming down in the lower half of the 5-minute MSR channel. It's gonna bust my ES trade, which it's almost done for me right now. I'm watching, waiting. I want to see if we get a reversal back up right here. Technical damage is gone on the 1-minute chart, but it's still there on the 5-minute chart. Still not a good situation. If you can avoid being in, this is a good time to avoid it. That's the message at this stage. Okay. And I'm out of my long on the ES. I had to take a little loss there, unfortunately, but it's the way the cookie crumbles. If I get a reversal pattern, great. If I'm getting a short signal on the NQ at this stage, I would need to see the breach of the 5-minute chart channel, the breach of the slow speed line on the 1-hour chart, which is a lower low. So 675. So we are getting a breach. We are getting a breach on the 5-minute chart, on the 1-minute chart MSR channel on the ES. We're getting a breach here as well. So the short could work. Just keep in mind, there's support at 77.51, 52, 50 in that area. So those that are trying to short right now, enjoy, be careful. I like that, George. You're crushing the hub trade, hands under bun trade. Amazing. That's the way to do it. Okay, so those who are in shorts right now, be careful. We've come down to test a support structure on the ES, 77.53 to 50-ish area. If we maintain above 77.51-ish, we've got a better than fair chance to bounce. So be careful on your shorts. If we come down, slice right through 51, it's a short. And that's why getting that stop in, Wes, and just it makes a difference, right? It makes a difference. So the market now is trying to bounce back up off of a test at a lower bound that should have support for the ES. But again, we're in a sell signal state on the ES on a 1-minute chart. Same on the NASDAQ. The 5-minute chart on the ES is converted to sell. You can see it on the NASDAQ. It's also converted to a sell. So don't be surprised if we're going to keep grinding down here. We have broken the speed lines on the 1-hour chart. And where could we be headed? To the top of the MSR channel, 32. So that can happen right here. And we can have a little whoosh. Anywhere down from 655 to 635 to 615 would be where we could whoosh down to. I would expect a reversal up off of there. So be kind to yourself here. Don't chase it. If you're in, amazing. Manage it. So we got breakout forecasters. We're trying to get back up above the speed lines. It's not working on the NQ. It could promote another short attempt, potentially. Remember, we're coming into the end of the hour. So I'm not taking on anything right now. I'm just waiting for the hour change. And then if we remain in a sell signal state on a 1-minute chart, 5-minute chart, and decide to make another leg down, we've got movement down towards 600 or lower. Again, I doubt that that's going to be the case. I think the market's trying to consolidate to retrace back up towards the highs that we had during the jobs print or higher. At least that's what the big picture charts would tell me is likely. It's just taking a lot of time, and it's not smooth. But that's all right. That's we just gotta wait. Just be patient. So indecision, bullish reversal, above the speed lines on a 1-minute chart, still sloppy on the 5, still in the lower half of the channel. ES came all the way down to support at 77.51 and bounced. FYI. That bounce has not made it up above resistive structures that make a difference. So, you know, the morning is starting to become a morning that is a lot sloppier, slower moving. It's struggling to try to get its footing again, but it's not as if it's off. Right? You look at the ES here. 1 hour charts in a buy signal state. We're holding the slow speed line, trying to get back up above the fast. We're holding the MSR channel on the 5-minute chart, and we're in a buy signal state on both the 1 hour and 5-minute. The 1 minute's the problem. So the bleeding or leading edge, which is the bleeding edge, did come down, did make a lower low. It's more affected by the nature of the market day because of the data that broke. It's going to have more weight on the ES because less jobs are created. And we still held support, right? We did the work right up front, 77.50-ish, 51, 52. I think at that time we had assessed that's a support line we need to hold above. We need to get above 77.60. And then it's home free above 77.70 to 75, somewhere in that area, depending on acceleration, up and away we can go. So we've been trying to, follow that path, but it's not been working. So again, we know where the danger line is, 77.50-ish, give or take a point or two around there. And then if we move back down lower, we're headed down to yesterday's lows. And there'd be dragons below yesterday lows, where we could get sucked all the way down into the lower 7700s very quickly. I doubt that that's the case based on the configuration I'm seeing in the market and the signals that I'm seeing from a daily time frame down. But look, stranger things have happened. Let's see how this wants to play out. And if I'm comfortable finding an opportunity and taking it, of course I will. So right now, no trade for me. It's too sloppy. I'm waiting. And Subham, I think you're asking about giveaways. I don't have giveaways, but I have an amazing coupon code. So I'm happy to share that when there's time. Right now, I want to just stay focused on this. And that refers to, of course, an FFF account. So I'll share that with you in just a bit. But right now, I want to stay focused on the trade opportunity. The NASDAQ magically reverses. Amazing. If it wants to continue down, okay. Is there a short? The ES would have to come down and break 77.50. We're at 77.56. The NQ has problems, certainly below 600. 600 flat, really. That puts us then in the lower half of the hourly charts channel. And it can get sucked down pretty quick. We are trying to make that move lower right now. We're coming down. This is a risky area for a short, but it is hammering at it. I'll try one. It's just one micro, tiny. I'm not going to short the ES until I see it below 77.50, which can happen very quick, right? It can happen very quick. So just be aware. I'm jumping off the NQ or the MNQ trade, and I'm looking at the ES now for my opportunity. If the short becomes real, the target that I'd be trading it down to below the 77.50 line, so I'll short it at like 49 and 3 ticks, 49 and a half. The target, first and foremost, would be around 46. And we're at 77.52 right now. NQ is threatening a breach of its champion trend buy zone trail line, but it is not it's not broken. It's threatening a break. It's already breached. And if we're going to come down below the 615 marker, it's not game over, right? You start getting down below the center of the hourly charts MSR channel, which is actually at 590. Then things start to get a little bit more rowdy and hairy to the downside. Sultan, that's amazing. And stopping yourself now after that, amazing too. Take a breather, take it in, right? This is so sloppy. Like, take a look at the ES now. Tentative buy signal on the 5-minute chart, still under the channel. Triple S tentative buy. The buy signal that we're in on the hourly chart, it's got the blue dot underneath, so it's not robust. 1-minute chart came down, double bottom-esque. Neckline is still up here at 63. No short for me unless it comes down below 50. No long for me unless it comes up above 63. So you can try in between, but it's lower probability of success inside the channel. Could the NQ lead us up? It's tried and it's failed. The ES is overwhelming, to the NQ to a degree today in terms of when it moves down. So I don't see a lot to do here right now. But we've got the speed lines crossing over. We still have a downward sloping channel. We're in a sell signal state on a 1-minute chart, but look at what's happening with the Spike 2.0 and the Triple S tool. The Triple S line has come back in from underneath the channel, back into the channel. The slow spike has come from underneath the channel, back into the channel. So this is a sign that we've exhausted our bearish fuel stores. Now you can still fall off a cliff. You don't need fuel for that, right? And that's absolutely, thank you for that, Betsy. Appreciate that. Geopolitical risk is coming into play. So that could definitely be what's adding to the negativity here. But I'm seeing the NQ run out of very short-term bearish fuel. Just remember, it doesn't require fuel to fall off a cliff, right? You can just get tipped over. So technically, this could be a mini little cliff line. But again, we've already done the work. It's 590. That's the real danger line, right? 590. Hey to the folks logging in. So right now, it's just a waiting game. I'd rather not be in a position with this kind of slop. We're trying to potentially build a base to push back up. My thesis on the day was, hey, we've already paved a path through the jobs print, had some great trading in the pre-market on the jobs print and in general, and the cash hours has been very sloppy, which can happen. But the thesis on the day was we've got this configuration with a weaker dollar, stronger euro. We've already paved a path to highs. We've already paused over the last couple of days from very overcooked conditions in markets. The ES did not work off as much of its overboughtedness as the NQ did. Neither nor are at this stage giving me what I need to say up and away we'd go. It's stagnating. We've already seen the 8 a.m. hourly bar fully retraced, almost fully retraced. I'll make it full screen here so you can see it. But we are in a buy signal state on an hourly chart, and the hourly chart is the day trader's boss. It's the architecture for the next 3 to 6 hours, but it's not giving me a reason to go in and buy it off of this dip, right? We would need the time frames that matter underneath the hour, like the 5-minute chart, to be in a robust bottoming process that converts into a buy signal state. That's not this, right? This is a sell signal from Triple S, a buy signal from the champion trend indicator. Champion crosses in a sell, and we're just stuck between falling resistance and sideways floor. Not good. The floor breaks, sure. Short can work. Short can work below 615 down to 590. Below 590, there's a lot more credibility for the short to keep working. The center of the MSR channel on the hourly chart is at 590. The ES is coming down to 51 again. If the ES comes down and breaches 50, which it's about to, I'm going to probably take the short there. I want to see breach and a little run. I'll probably target 49, and I'm targeting a 3, maybe 4-point trade if it materializes, but I'm not holding my breath. Right? Again, my bigger picture view on this day is a day that comes back up towards the highs that we saw when the jobs print came out weak, which came out weak in an environment where rates are a little bit more constrictive. So if the Fed is going to reach, both of their goals, full employment and an inflation target, whatever their number is that they're targeting now, well, we certainly are not going to get there if rates are restrictive. Okay, 50 and a half, 49 and 3 ticks on the ES. I haven't executed my short on the ES yet. If we come down into the 49 and a half-ish area, I'm going to execute. I'm executing a short on the ES. So I'm in. Okay, it's in right now. I've executed a short on the ES, just letting you know. Okay, it's in. 46-ish is what I'm targeting. There we go. And thank you very much. And the trade was in force for more than 10 seconds. Can the trade continue? Yes, it can. Down to 39. Is it better to do it on the ES or the NQ? I chose the ES with reason, but the NQ has now breached the center of its MSR channel as well. So I said 590 was the number. Those that took the short are already up 20 points at 590. Those that took the short on the breach of the champion trend buy zone trail line are up 35, 45 points on their short. And I'm not resuming my short right now, but I'm hopeful that those who tried to get the short got something out of it, maybe repaired some damage, maybe made some more, but I'm hopeful that there was something there for you. Happy for you, Angel. And Kevin, happy. That's good. Who else got it? Hey, Fuad, nice. Back on the horse. That's good. I'm still looking for the next opportunity right now, and I'm not seeing enough of what I'd want to stay short. Okay, but to re-enter, we're at the line. The line being the center of the hourly charts MSR channel. We're slightly below it. The risk here is whipsaw. Green dot, spike 2.0. We're not in a sell signal state on the triple S tool. Chandra, happy to hear that. I'm sorry to hear that, Donna. It happens, right? Tech glitches can happen. Wesley, kudos to you, my friend. Look at that, right? Just remember, the emotional satisfaction is irrelevant. Did we find a trade opportunity, stock it? Yeah, it worked. Are you going to still hear me say the same thing to you about how I think the day plays out? Yes, that has not changed. The hourly chart has not changed signals. And layout code that I have on display right now, Samuel, yes, absolutely. Do you have the triple S indicator, Samuel? I think you do. You'd need it for this. Let me just see if I can. Yeah, you do. Okay, so let me actually do this right up here. And while that's happening, I'll put this up because I need to find exactly where that code is. I had it written down, but I clearly don't know where it is. So I'm just going to export it right now. So bear with me for a moment. Boom, got it. Got it. Got it. It's in the chat. So what are we seeing right now? Lower half of the MSR channel is where we are on the S&P E-minis. We're below the speed lines. We're below the center of the hourly chart MSR channel. Now we're back up above it. It's fine margin. Are we still in a buy signal state? We are. But the triple S tool is showing you that blue dot, right? Which means the trade is cooling off. Trade wasn't ready to go. Double green dots came in. 7 a.m. bar. Preceded the big push up. All the videos I produced in the morning well before the event at 8:30. And they were sent out before then as well. For those of you that are on the email list, you heard my opinion. Likely jobs is going to be up, meaning the data is going to come out poorly. Market's going to go up. And then a harsh retrace, right? As we get into cash hours open, even before that, we had started to retrace. But we have not changed from the buy signal state to a sell. Now, one of the things we can look at is the slope of the blue line from the triple S tool. Okay, so if you look at my horizontal crosshairs, right, you can see that they're perfectly flat. We're still sloping up, still sloping up. What does that mean? We have a hourly chart that tends to throw its signal out 3 to 6 hours. It is the boss for the day trader. It's nested in a buy signal state from a 4-hour chart and a daily chart. Okay, it's telling us we're likely going to go back up. So we should hit support structures and bounce up. The question is, where does it become viable to join the trade? I like 63, 77, 63 on the ES. So I've said that already, but I just wanted to get down into the nitty gritty on that with you. And we still have a little ways to go before we get up to 63. Now, with respect to the NQ, if we are going to make a move of significance on the NASDAQ side, we are certainly back above the top of the MSR channel. We're in the 650-ish area. I ain't touching along until we're above the hourly chart's fast speed line at a minimum, and that's still a bit questionable. So that's sitting at around 710. 710 against a 5-minute chart and the structures we're dealing with over here puts us in the upper half of the 5-minute charts channel, but we still be in the we would still be in a sell signal state. But that would be the area where I'd consider it 710-ish. I would consider it 710, 715, somewhere in that area. And on the ES, I would consider it above 63, 77, 62 to 63, actually. The hourly chart's fast speed line is effectively sitting right over here at around 77, 61. And the top of the 5-minute chart channel is sitting at 62. Now, we need to be above both of those to make this a relevant long side opportunity. This could just be a back test of falling resistance and we get whacked back down, but I don't think that's the case. I think we've got a market configuration that supports up. So the question on oil, Betsy B put it in the chat, and I'm going to bring up a template that's got a lot of stuff on it, and we'll just take a look at it. It's the Day Trade 2 template. It's available for all wealth charters to utilize. It's in the premium layout section under ZIAD's day and swing layout. I'm just trying to gauge positioning of the market against volume weighted average price cones on an intraday basis from 9:30 a.m. Eastern onwards. I'm just grooming the actual template right now. Oh, Russell's done a nice job. Financials have been holding the fort the entire time. Oil's backing off the high, right, Betsy? So there's some good stuff happening there. And you know what? I'm going to take this trade above 710, 715, or am I going to take it on the ES? We've already had the run up on the ES. We're at 63. You've heard in advance that I think that we're likely going to try to retrace back up to the highs from the jobs print that came out. We're seeing, the market toil towards that end. It's obviously not there yet. And I want to take a piece of the move when I'm not encumbered by resistive structures. So right now, no thank you. I'm waiting. We've opened the door on the 1-minute chart. That's good. Impulse to buy is there. I'd like to see my triple S indicator get above the lip between quad 1 and quad 2. It's doing that right now. I'm taking the trade. 1 micro. Not doing anything serious here yet. Those who are taking it on the ES, we're at 65. It's a valid trade. I would not be in it if it submerges back below 63. 62 and a half, actually, 62 and 3 ticks. So it might test it out a couple of times. It's likely going to hold and bounce up, but be very, very careful. So this is still a challenge here, right? This is still a problem, right? We know that. And I don't like what I'm seeing right now. If it does not pick itself up and put its long pants on quick, out I go. But I've got good stuff happening. The NASDAQ has gotten back above VWAP on the day, at least tentatively. Russell Financials, S&P, they're all in their uptrend zones on their VWAP cones on the day. If we look at absolute ticks on the NYSE, We're near a higher tick relative to the ticks that are presented on the day. Ticks are like the raw buying pressure, selling pressure. Volatility is nose to ground. We're holding above the center of month-to-date VWAP cones on the NASDAQ and the S&P. My order/disorder tool is telling me that there's less disorder, there's more order, coming into the market, which is good for up. Disorder is good for down. But I'm not really seeing any progress on the trade. And the ES is stagnating right now. It's at 77.64. It's still holding above the buy line. Okay, it's going to start getting going here. Okay, good. Let's see if it gets above the top of the MSR channel on the 5-minute chart, 33, and then I'll add to it if I can. Otherwise, I'm going to have to bug out if it wants to come back down below that fast speed line. I don't want to be in the trade while we're stuck. But again, I think that one that has the risk tolerance to hold on will probably get rewarded, but to each their own. Manage your P&L. Make sure that you're walking away, with something that you can look in the mirror at and be comfortable with. So I've just literally got a pinky toe dipped in, and it already feels like it's getting stubbed. So I don't know if I'm going to stay in this. This should be back test and bounce, but if we get into the channel, it's just unnecessary. Oh, Howard, that's great. That's great. I'm happy to hear that, and I'm happy to hear the choice that you're making on that result too. Good on you, sir. So this is no good. Okay, now could it bounce off the champion cross buy zone? I can leave it in force. It's not going to break my P&L on the day at all. So champion cross buy zone is in the backdrop. Channel's technically damaged. Fast speed lines crossing the slow. ES is really the backbone of the move, though. Right? It's in a bull flag formation under resistance. 63 was the entry line. It's at 65, 66. 5-minute charts in a buy signal state. It's not the PTC pattern. It's just a triple S buy. Hourly charts been in a buy signal state, and you'll note that the double green dots came into play again. And I didn't bring up the day trade 2 template. I don't want to scare people, but there's a lot going on it. But I'll bring it up very briefly here. Hold on. So this is what I was kind of commenting on earlier. Ticks are positive enough, holding month-to-date VWAPs, ATR lines moving down, less disorder in the market. We're near the top of the VWAP cone for the S&Ps, but we just got above the center for the NASDAQ. They're extended, obviously. We're in an extended market overall, but we had some cause to, we had some of that overboughtedness come down. Is the trade in the money? Yeah, it is. And now it's not. Oh, that was a quick turn of events. Up $50, down $20. Okay, it's not a huge deal here, but the insight very simply is it's a market that has a better chance to try and push up towards the path that was paved through the jobs print, which created this mechanical move in the market. Drop on the dollar, drop on rates, pop in the euro, glow up even further on precious metals. Byproduct is equities rise. There was a short squeeze, obviously, that happened that helped take it up. And now the question mark is this all we're going to get here? Look, if this bar goes red on me and we start coming down, I'm going to lose my patience with the trade and get out of it. But I'm going to tell you that above the high of the last closed 5-minute bar, I'm going to get back in. Now, I like the fact that we're pushing back up again. The speed lines are there. I'm going to try to add a contract. Okay, so I'm going to add a contract here. Now, technically not the ideal spot, but it's getting going with force. This is the 4th or 5th bar trying to push up off the top of the MSR channel. And look, I've held the trade long enough. If I get escape velocity, great. If it starts to submerge, I'm taking my profits. My finger's on the trigger to flatten. If we push through the top, we should slingshot higher here, and we could see easily 77.70. 770. My apologies. Okay, now I'm waiting patiently. There you go. Got a little pop, but it just backed off. There we go. There should be another 20 points real quick, and it's not happening. I'm taking my profit. Thank you very much. Those that are still in, manage it how you see fit. Right? There should be another 20 points, oh, now 15 points. And the pause should be around 771, 75, somewhere in that area. Doesn't have to pause exactly there. Looks like it paused at 59, but it's not done, right? It's still growing. So in advance, you're hearing not me, predict. It's not prediction, it's probability, right? So based on the pattern of what I've seen in these types of days where we have a macro event in a stretched market that's cooled off, modestly cooled off, but it's a macro event that supports liquidity being more available and a weaker dollar. And what does that do? Well, think about your stock certificate as the numerator of any equation, and the US dollar is the denominator. If the US dollar is coming down, forget about what's going on with the stock, supply demand wise, just natively, if the US dollar is coming down, the fraction is worth more. So this is what we're dealing with from that print. When we have those types of events and we pave the path and we retrace a good chunk of it, but we don't come down and break major supports, more often than not, we come right back up to retrace back up to the highs. And here's the proof in the pudding. And I hope you heard it like throughout the entire morning, right? Here's what I think we're going to probably do. You kept hearing me drone on that we're probably going to come back up to the highs. The ES is doing that. Has it superseded the highs? No. Do I think that we're likely to? Yes. Okay. The NASDAQ at this point now is a question mark. Okay. So the NASDAQ has not quite come back up to the high that was made here. It had more short squeeze in the response in that pop-up that happened at 8:30. So we need to find some buyers here. Now, if you go and take a look at the bigger time frames here and you go back to the daily chart, the good news is we've started to come into at least a tentative buy signal state at this stage on the daily chart. We've got the champion trend buy zone plaque, wealth signals there. We're above the speed lines. Okay, all that is looking good. But if you're listening to any of the stuff that I said up front or in the videos I did this morning, I want to see my indicator, the triple S line, cross through the center of that channel. It's not done it yet, right? It was trying to earlier, earlier in the morning. This is a daily chart, by the way, but it's not sustaining up in that territory. We get above 850, 900, we're going to cross above and into the center of the, into the upper half of the channel. The other good news, though, is it's trying. The 4-hour chart is in a resumption buy signal. Okay, it's in a resumption buy signal. Okay, the 1-hour chart is in a buy signal. This is how important the signals are. We just hit 775, right? That was the trade idea, and the ES just made a higher high, by the way, right? And I'm kicking myself explaining something, not being in a trade, but you got the idea, I hope. So this is a pause area, 771 to 775. I diagnosed a pause area. You're getting the pause pretty much exactly where I diagnosed it. Now, what would be great is a fairly quick reversal pattern or PTC pattern. So we've got one up, one down. Let's say we left with the down. The next bar goes down a little bit, reverses back up. We get another up signal. We need 3 signals for the PTC pattern to be, really in play, but not confirmed. And then we need to see follow-up rise after we're left with a buy signal. That'd be great. But again, I can want whatever I want. I need to see what is. And the ES is doing the job that I thought it would do. Like, it's come up, it's made higher highs. We're at 77.80. That's all very encouraging. And by the way, it's got the PTC pattern. Geez, on the 1-minute chart. So the PTC pattern stands for pre-trade conditioning pattern. It's exclusive to the Triple S toolkit, which is exclusive to wealth charts. 10:23 a.m. up signal, 10:24 down signal, 10:25 up signal. You need a minimum of 3 signals separated by no more than 6 bars between each signal. So here they were back to back. And it's a little extended where it's happening. It's happening well above the channel. But what you need in order to then have the pattern engageable is at least 1 bar rising above the channel. And in this case, it would have to be above the signal bar with the double green dots below it, or 2 bars sequentially rising above the signal bar, back to back. We had that, but it's not robust. It's a 1-minute chart. It's supported by the 5-minute chart, supported by the hourly chart. So I'm still going to put faith in the odds, not the ethereal, I hope, or, I wish it works out. No, I put faith in the tools because they have probabilities that I like. I'm not entering the long here, though. I did a little long earlier. You saw it on the NASDAQ. It was profit positive. I built it as well. It came right up to the territory that we diagnosed, roughly 775. It's paired back. I'd like to see a reversal pattern here. Good news. We've got the spike 2.0 green dot. That's there. We're through the center of the hour. All of this is good. And what I have not done so far this morning is really done a roundup. There were some challenges earlier in the session, right? I hope most folks have worked themselves through those challenges because the opportunity was laid out clearly that we're likely coming back up. And then you saw me execute on it over and over. Let me know how you're doing. Lucky number 7, that'll let me know you're okay. Unlucky number 6, it's not going so well. You can let me know however you want in the chat. Haven't seen a 6 yet. I've seen tons of 7s. I like that, Wes. First a 6, then a 7. Isn't that like some sort of a meme? I remember Julian telling me about that a while ago, 6, 7 or something like that. Anyways, I don't even know what that's about. And it happens, so be careful. Sultan, keep it in check, though. Keep it in check, right? Understood. Maybe dial it back. Maybe dial it back to 1, right? And get the mechanical stop, the trailing stop, the bracket order stop in, right? So if the next entry comes to fruition and we end up getting it going, that's great, amazing, right? But if it doesn't end up working, you want to take your money off the table. And yes, here it is. Sorry. Okay. So for those who wanted to take advantage of the FFF coupon code and the discount, I'll just put it up on screen. I know folks are asking, so here you go. Bear with me for a second. I need to just find it. Okay. So for those who are trying to get a FFF account using the ZIAD code, which gives you this incredible discount, and the discount applies to the revolve if you're keeping the account on a month-to-month basis. So go to fundedfuturesfamily.com, of course. And once you're there, if you don't have an account with them already, and this is a good group of people, they have money, they pay out, right? So that's why Rob is partnered with them. This is why I'm also supportive and trading those accounts in front of you. Log in or set up your new account when you click the login button if you don't have an account. Once you get there, you'll have a dashboard that pops up and go to the Get Funded button. So once you click the Get Funded button, you'll have this pop up. Actually, no, let me just do it this way. You'll have that pop up. That will pop up. And you can check out all their plans, the Premier plan, the Velocity plan. The cheapest account that they have available is a Velocity 25K account. And it's $79 a month. But if you select it and hit the Get Funded button and you put it into your cart, you can then apply the coupon code ZIAD. Right? So you can just literally put that coupon code. It doesn't have to be all caps and hit the apply button and it will take it down to 1580. And that's where it will stay. That's where it'll stay. It's not going to go back up to 79 bucks. So it's there for you. For those who are asking, I know several of you did. There's your answer. Okay. Okay. Let's go. It's a great deal. It is a great deal. So big thanks to the FFF team, the FFF family, for making that available to all of us. Amazing, Gus. Correct. No activation, Bob. No activation fee, and the revolve is at the price you come in at. So we're waiting now to see if this malaise, after hitting literally the exact target that I professed to you in advance, will come up to 770, 775. We came a little higher, maybe a couple of points. Are we going to get a reversal here or not? I'm not in any trade right now. I'm just waiting to see if this malaise takes care of itself. So let's start talking a little bit about the end of hour dynamics here. So it's 80 or 90%, something like that, George. Exactly. That's right. So with that coupon code, with the ZIAD coupon code, it's Gus, you're saying it's 90. There you go. It's incredible. So take advantage as you see fit, of course. And I don't know how long. I don't know, Gus. I don't have an answer. I'm not trying to be silly, but I just don't have an answer. Okay, so the next question now for me is, and exactly, it's $25 for a 50K account. That's right, for the 50K velocity account. That's right. So if you're looking at the the NQ or the ES at this moment in time, we hurry up, getting ready to go back up towards the highs. The ES did it. The NQ did not, right? You can see that it came up to the 770s, and we were in the mid 800s, mid to upper 800s, when the data broke at 8:30 in the morning. And it's the 850 line that we need to be above on the NQ in order to really open up the throttle for more upside. The ES at this stage already came up and made higher highs during this hourly bar, right? We got up into what, 77.81-ish. I think that we're going to carry on. The basis for the outlook is, again, very simple. And yes, Christian B, yes, of course you can copy trade with the FFF accounts. Just use OmniProp with wealth charts. Make sure you select wealth charts. And of course you can copy trade. Back to the insight over here. The backing for the directional outcome was the hourly chart signal, slope of the slow momentum line or the king and the queen line of the triple S tool, which is sloping up. None of that's changed. Now this PTC pattern ended. We got the cooling off dots. We didn't get double green dots. Now I like the PTC pattern when it happens in the channel or very close to the channel. If it's a buy side and it's well above the top of the channel, it's not my favorite. If it's a sell side and it's happening well below the bottom of the channel, it's not my favorite. If it's happening very close to, or better yet, in the channel, amazing. So here we've got a down, we've got an up. Okay, maybe it forms again. Where could I responsibly take on a long on the ES from here? 78 and a half would be the number. And on the NQ, where could I responsibly take on a long? Well, it doesn't look like it's going to happen, but again, what it looks like and seems like can change very quickly. I think I would still have to wait for my 770 number to 760. I'd get interested. 775, I'd be in, but it's not coming to fruition right now. In fact, the PTC pattern on the ES is now starting to form on the sell side. Let's talk a little bit about end of, I think you got, oh, you're looking at a 30-minute chart there, Bob H. So I don't really look at the 30-minute chart. It can end up being what when I did my work for the nature of trading that I'm doing in front of you here, I found that the 1 minute, 5 minute, 1 hour, 4 hour, and daily chart was what I needed. I also look at the weekly, but it's not relevant here. The 15-minute didn't seem to give me an edge. 30-minute never gave me an edge, right? So I have started working with the under 1 minute time frame, the 10-second charts, which are quite interesting. I've been waiting to, when I want to bring them on. In a slower market, it doesn't make sense to me, right? For some people, it would make great sense in a slower market. The 10-second will give you that leading edge. In the faster market, I can do a lot more scalping with the 10-second chart, the 1 minute and the 5 minute. But I have not formulated my full plan for how I'd want to introduce that. So I'm not going to do things that I'm not comfortable with yet. I know lots of you already use under the 1 minute time frame with wealth charts, and it's amazingly lightning fast data, which is very cool. I'm still figuring out what my role and how am I going to add value there is what I'm trying to figure out still. And I think I just need some more time on the charts with the 10-second chart. That's about it. Uh, you mean like the like market depth kind of thing on 30 minutes, Dave T? Or are you talking about that service? Well, thanks, Charles. Yeah, I remember you telling me you had yours today, right? I had mine earlier in the week. I hope it's not painful. I hope it's just a regular checkup. So Dave T, to answer your question, I don't know. I don't use that service. And it's interesting that you say that, Bart, because the way I was thinking about it was I can maximize directional trades in a faster market with the smaller time frame, right? Because I'm lightning fast. Like you've seen me do it with other accounts where I'm in and out in milliseconds, right? Well before 1 second actually even expires. Okay, so I'm not seeing any great opportunity right now. We've moved into a flagging sideways sloppy pattern that I still think leans to rising into the end of the hour. And we're coming close to a time window where we have to be a little more careful. Between 1047 and 1053, this market is not cleanly net long, but it is still skewed to net long in terms of short-term volume that's in force that will be coming off the tape, not only for the day, because strategies that come off the tape at 11 a.m., markets that close across the pond, but it's also coming off for the week. There's going to be strategies that come off for the week as well. So I'm having a little difficulty, putting my finger on, if are we skewed enough to the long side where if we are rising between 1047 and 1053, we're probably going to run up still into the end of the hour. But if we're not able to rise, are we going to see selling beget selling much quicker? I think we still got the skew is to net long, and we'll observe where this market goes during that little testing window and see how it goes. So Richard B, I'm using wealth charts for my futures feed. I'm using wealth charts for everything. For FFF folks, I don't know if they provide the data or not, but it's yours on wealth charts. I think there's like an add-on maybe. So that should be fairly easy. I think you can actually do it in the account settings, but I'm not 100% sure. And Vivian, I don't, right? I've just started dabbling with the under 1 minute time frames. So I don't look at 5 second, 1 second charts. Just responding back. I just caught your question there. Okay, so now what? Where are we going? We're dealing with a market that has still got the hourly chart signaled up. We've moved into a sloppy sideways range. Again, we're trying to breach the bottom of the 5 minute chart MSR channel. We are in a sell signal state with the Triple S tool, the Champion Trend Pack Toolkit, on a 5 minute chart, on a 1 minute chart partially. Champion cross is there. Champion trend is still a buy zone trail line. Triple S is a sell. The ES is in a PTC pattern on that 1 minute chart to the sell side. We just need to see a bar close below the 1 minute chart's MSR channel. I'll show you what I mean. Right, we've had a minimum of 3 signals, 1, 2, 3, left with a down. We need to see one bar close below the bottom of the MSR channel with the double red dots, or 2 bars sequentially lower. Don't have it. So it's not a sell pattern yet. Exactly, Richard B. Yeah, so you can just literally call in and get it done right there, right? So it's there for you, and you can get that data streaming. So folks, have you had a good morning? I know it's the end of the week now. We are going to have more time together here, obviously, into the end of this hour and a little bit after 11 a.m. Eastern. But how's the week for you overall? For me, it was pretty darn good. Continuing to build my accounts, and more wins than losses overall, and pretty happy with gold and silver. I hope others in the room are happy with it as well. We had that insight first thing on Monday, and it's worked out very, very well throughout the week. Vinny, I'm happy to hear that, man. That's great. And to everyone writing in, right? I'll take the 6.5, Gus. I'll take that 6.5. That's still a good week. That's awesome. That's great. I'm happy to hear that from so many folks. That's amazing. Well, thank you for sharing, how it's going. Yeah. Okay, well that's a good way to put it, Fuad. As long as the learning turns into earning, we're all good, right? Rodney, happy to hear it. The outlook didn't work out, Anthony. We got into major high. So you saw me amend it during the week, right? The insight yesterday was we're going to bull flag to try to come up to higher highs, and see the NQ retrace back up to and above 29,850, and see the ES try to retrace back up towards 7,800. Right. So I made that amendment not only yesterday but the day before, live during I think our midday sessions. Right. So we have to scrap our flight paths, because when we're in this no man's land territory, it doesn't matter how much math I do. It doesn't matter how much I try to forecast it out. It is a beast to do. So we worked with it, rolled with the punches as we could during the day and during the week, and it seems to have worked out for most folks from what I'm seeing here, which is really good. Now, I'd like to know when we're going to come back into some like normal frame, but I think that's probably going to have to wait for the seasonal negatives that we usually see in September. So we've now gotten into that time window where you can observe direction and price. If you understand the net positioning of the market into this time window is skewed to long, if between 1047 and 1053 we see more of a rise, especially on the S&P E-minis, we have a better than fair chance for a rise to continue until about 10:59 a.m. Eastern time, rather than the positions that are organically going to be coming off the tape, starting to sell into the end of the hour. But we have to observe whether or not directionality is more net long or not as we go through this, and we will. Hey, Sleepy Trader, I'm going to read that out if that's cool with you, right? Because that's a great comment. Okay, Sleepy Trader's writing, a day like today is a good reminder that trading is all about waiting and looking for reasons not to trade until there is a good enough reason to trade. Well said. Which you've seen me try to do in my own way, but obviously there's lots of words here. And I'm still waiting. I want to get one more trade off before the end of the hour, but I don't want to just force myself into it, right? If we end up seeing more of a rise over the next several minutes, the predicted outcome into 1059 would be up. But I still have to gauge this and see if that ends up being the case. We're going to have a nice little ride into the sunset, if you will, that could be useful. And look, the thought process for outlook as we move through the end of the day today and into next week, I'm going to cover that after we take a break. And I'm also going to answer questions as well. So, make sure that you're here if you want to have questions answered, if you want to have an outlook presented to you for where the major indices and things like precious metals are likely going to go over the course of the balance of the day, Sunday night, Monday morning. I can provide that kind of insight. And right now, what I'm really just trying to figure out is, can I take on a long here or not? I'm waiting. And again, the way I say it, can I take on a long? I'm trying to figure that out. Is I'm not biased to up. I'm signaled up on the hourly chart. I'm signaled up on the 5-minute chart in terms of the ES, right? Which is the market that has got more tentacles attached to the geopolitical issues, the job and FOMC issues, right? And so far, I agree, Jimmy. It is a nothing burger, but don't start talking about burgers. My last meal was at 5:30 a.m. somewhere around there, so I'm already getting there. Exactly, Christian. I might get Julian to make it for me. He's he's been going to cooking camp for several years now, and he's actually quite good. And he makes interesting. He made his own Coca-Cola the other night because I'm like, I'm not buying this stuff and bringing it in the house ever again. He's like, no problem, I'll make it. I'm like, okay, fine. And it was actually good. Yeah, exactly, Christian. So I'm not seeing anything here that's extraordinarily exciting for a long side trade. Could the short end up working? Well, look, if you look at 10:47 a.m. Eastern time, right there to where we are now, the majority of the time is sideways to down. Okay, this does not bode well for a rise into the end of the hour. It actually would support a move down. Unless we magically pop up on the current bar and we end up somewhere above 740-ish, 735-ish, the insight on the NQ would be they're more likely going to see selling, as we move into the last 6-7 minutes of this hour. It's a similar insight on the ES, right? We spent most of our time sideways to down from 1047 to 1053. That's right here. That's that. So unless there's a magical pop-up here that takes us above 775-ish, it is less likely that we're going to see up and away into the end of the hour. This is just a little evaluation pocket that I'm just running you through the paces. That's what it would say. That's not what I'm going to make my decision on, right? I'm just armed with the information. And now if we end up seeing a breach below 660, I could short that. If we see a breakout above 740, 745, I could long that. Otherwise, I don't really want to play inside this traffic mess right here. And for those who are trying to attack the ES into the end of the hour, again, I think Jimmy nailed it. It's a nothing burger. Right? There's not much happening here. Below, there's support at 63, and it's strong support. If we dip down from here, we would probably bounce back up off of 63. Ideally, a long still emerges. I don't think I would take it on unless we're above 74.5. So I'm not doing anything right now, actually. And I think in the role that I'm playing, doing nothing right now is actually a good message. Kendall, Eastern time, New York time. You too, Jimmy. And Gus, that's, it depends on the time frame, right? When you're in a choppy market, you can get a buy signal that converts, that immediately does not work. You can get a sell signal that immediately does not work, right? If we're inside the channel and we're chopping around, especially if you're seeing that, your dominant insight should be, what color is the channel? It's magenta. We're technically damaged, which means the technical signals that will emerge, especially on smaller time frames, have less effectiveness. The channel goes back to green, price is outside or above the top of the channel or below the bottom of the channel, then we've got some game. So I'm not seeing any great reason to trade or really sit back and say, I'm going to force myself into it. So I think we should take our break now, come back at around 11:05, and then discuss an outlook, moving forward. We'll do an assessment of the now, outlook into the end of the day, Sunday night, Monday morning, and then answer questions as well. If there are applicable trades during that time, amazing. So I'm just going to leave it alone right now. I'm quite happy with my P&L result on the day so far. So I want to grow it. If there's a trade available from 11 to 11:30, I'll very likely take it, but I ain't doing anything right now. Okay, folks, let's take that break. I hope that things have gone well for you. I know some folks will have to leave, and that's okay. I hope you have a wonderful rest of your day, wonderful weekend. We'll definitely see you on the flip side. So I am going to just put a little banner up here letting you know that I'm going to take a break and be back shortly. All right, I think I've got it right there. Perfect. Okay, so I'll see you at 11:05, and we'll resume. And if you've got questions that are kind of irking you, burning a hole in your mind, and you want answers, make sure that you get those questions ready, because this is the time where we do the debrief, right? This is a time where we can do the Q&A, and we can review decisions that were made in the morning. All right, folks, back here with you very shortly. Stay tuned. Well, hello there, everyone. I am back here with you. Hope the break was sufficient. What I plan on doing now is giving you an on the ground which way things are likely going to go, a little outlook in terms of where things can go throughout the course of the day into Sunday night, Monday morning, and then, of course, answer your questions. And now, Peggy, you've asked a good question on trailing stops. And whether or not you can set profit targets based on the average true range for a selected time frame. So that'll be the first question that I answer. But let's do the on the ground. Where are things right now? Where are they likely going to go? And on the ground right now, we are tilted up, as you can see. We're entering a buy signal state with the triple S tool on the 1 minute chart. We've also got one on a 5 minute chart. It is part of the PTC pattern, pre-trade conditioning pattern. We need a minimum of 3 signals separated by no more than 6 bars. Then we need to see a bar close above the MSR channel with the double green dots. We had that happen right there on the 11 a.m. Eastern Time 5 minute bar. So that's in the bag. And a rise now is a higher probability. It's likely going to be a grind. The same sort of pattern is in play on the S&P E-minis as well. This is a time of day where we can drift. So I'm going to try a little long and we'll manage it. But I'm in it right now. I just took it about 6 seconds ago. So you've got the oscillating pattern. You've got the at least 3 signals, and then you've got the double green dots, and we're holding the speed lines. So I'm looking for the ES, which has already made higher highs, showing strength to go up. You can make the logic, you can have the logic as, hey, the NASDAQ has more room to come back up towards its highs. Sure, it was a bit of a short squeeze that enhanced the rise of the NASDAQ during the release of the jobs data. But either or seem decent enough to try. I would watch it like a hawk. I don't think I would be cavalier about the long, but I'm in it. As I showed you, my execution was at 77. I'll trade slightly in the money. Okay, we'll see if it can continue. But the thought process right now is that the ES and the NQ try to come back up towards highs on the day and or make higher highs. The 1 hour chart, the technical signals support up. Now, you've heard me say to you, using the bigger picture charts, you heard it yesterday, you heard it the day before. So in particular on the NQ, what you heard me say is, hey, we're a little extended. It would not be strange to see the market come down towards 29,500. We did come down, and it did come down to that area. Yes, it stopped at that area. Very next morning, I'd identified enough technical patterning to tell you in the videos in the morning and right off the bat that we probably are going to come down to the halfway marker of the bar. And I think I was zeroing in on 29,200. And then we get a reversal. We came down to like 230 and we got a reversal. And the insight was we're probably then going to point back up towards the highs, which is what's in play right now. It was enhanced by a bad jobs print. Do I think that that's still the likely outcome, that we are trying to grind our way back up into the high point that we saw on August the 5th? The answer is yes. Where do I change my mind on this? When the 1 hour charts start to give me signals that are really poor, when we start coming down below the speed lines, when we start to see the triple S line flatten out or point down, that kind of thing. We're not there yet. So right now I'm still proceeding on the same plan where we try to come up into this area. And the higher we close, the better the chances are for a minor pullback on Sunday night before yet again a higher high on Monday morning. The lower we close, but not below 29,450, the better the chances are we complete the move down Sunday night, Monday morning. 450 to 400, 350, somewhere in that area is danger, danger, danger. And 450 should be a warning. All right, below 29,450, it should be a warning to those that are planning on holding positions over the weekend on the long side. If we're coming down below 450, we are likely to complete a more negative move that takes us below the lows we saw from August the 6th, down towards the lows of the August 4th bar. And this holds true for the ES as well. Obviously, the numbers are different. While we remain above roughly 29,700, 720, We're probably projected up towards the 850 area and or higher. And FYI, the trade that I took on with the pre-trade conditioning pattern is in the money, 125 bucks. I like that profit. Guess what I'm going to do? Taking profit. Not that I don't know or think that I can see a continued rise here. I'm literally doing the obvious. We just are coming into local resistance, right? We made that high right around the 81-ish area at 10:30 a.m. Eastern time. Okay, come up above that high. Give me a reason to believe it's either just going to rip and run, which is not the day part for it to happen, or come up above it, back test it as support, start another bounce, and I'll get in the trade again. Or I can switch to the NQ. But again, you saw another profitable trade there, backed up by the high probability pattern coming from the Triple S toolkit, which is the PTC pattern, where you need a minimum of 3 signals separated by no more than 6 bars. We're left with an up, and then we want to see at least 1 bar continuing to rise above the MSR channel top with the double green dots, or 2 bars sequentially rising back to back above the MSR channel and higher than the signal bar, the last signal. So right now I've decided to disconnect from that trade, take my $130 odd, $37.50 of profit, and then reevaluate. And I can potentially jump on this trade with the NASDAQ. I don't have to stick with the ES. But again, I hope that the insight as far as the outlook into Sunday night, into the rest of the day today, with the condition, hey, we need to sustain above 720 at a minimum, right? At a minimum to continue to say we're going to press on higher. If we end up coming up all the way towards the highs from a couple of days ago, don't expect a direct rise, but expect a minor pullback and then some continuation. If we end up coming down below 450 and closing below 450, expect a down on Sunday night, a down that could get hairy, one that could take the entire range of the August 4th bar out before another attempt at bouncing up. Okay, so you've got it there fairly clear, I hope. Here's what it looks like on the S&P E-mini front. So the insight was we're probably going to bounce back up, the NASDAQ pulled back a little bit more. The ES did not quite get all the way down into the middle of the August 4th bar. And I gave you a couple of levels this morning that were important. You may remember 77.50, 52, 77.60, and then 77.70 to 75. And look, we were able to get back up above these levels and, of course, up and away. Hey, it's my pleasure, JT. You have a great one. So as far as I'm concerned, I'm on path to try to continue retracing up in through this wick from August the 5th. Do we get all the way up to 78.20? I don't know. I think there's a better than fair chance for that to happen. If we come down and close below 77.25, danger Sunday night. We're likely going to come down and eat into the majority of the range of the August 4th bar. If we end up closing closer to 78.20, don't expect it to directly go up on Sunday night. A minor pullback, 10 to 30 points, and then another push up would be the likely outcome. Okay, so that's the extent as I can forecast it. So there you go. With respect to gold and silver, which I want to dot the I's and cross the T's on as well, because we have that stellar insight from the beginning of the day. You too, Gus. Yeah, I hope the day's gone well. Looks like it has. Okay, so we'll see you next week. It's the end of the week, right? So traders are checking. I know that feeling, and it's a good feeling when the week's gone well and learning and earnings happened, which is great. So on silver, watch out below roughly 62.90. Okay, we can come all the way back to center mass of the indecision bar from yesterday. If we end up closing closer to the highs of the day, expect a little bull flag formation and continuation Sunday night, Monday morning. If geopolitical risk goes up over the weekend, and oil has gotten perkier around the day, as we saw, right? It will come with a strengthening dollar, and that's part and parcel of oil up, dollar up, silver and gold have come down a bit, even though the equity market's trying to come back up. That's the way that the correlations are set up. So look, I hope that folks have locked in some of their silver, some of their gold. That's my hope, right? For folks who are riding it and continue to ride it from here, the way that I would operate for folks who are riding it and continue to ride it, and want to ride it back up to the highs on the day, just be careful. Make sure you put a floor in, take something with you. It's been an incredible rise during the week, 15% from the lows on Monday. And the insight was provided Monday morning to highs. Maybe it's a little more than 15% on silver. But look, if we're going to come down towards the roughly $62.90, $63 flat, expect us to pull back to center mass of the indecision print before the next attempt to bounce back up. Okay, that would be the idea. If we close closer to the highs, it'll be a minor pullback in bull flag formation before a direct continuation Sunday night higher. Right, this is fast and shiny, and it's got folks' attention, and money's moving in here. You're going to see it in the open interest in the commitment of traders reports as we move into the end of the day today. That there's going to be more open interest in this area on the long side, of course. So same thoughts on gold. The differential between gold and silver is if geopolitical risk rises, gold can actually hold on to more fear premium. So it can actually stay more inflated on a relative basis, right? So you see geopolitical risks rose. You saw silver eat into almost half of its range on the day. Gold is barely scratched, right? That's an exhibition of it being able to hold on to more of its gains because of fear premium rationale. So now what do you do here? Look, if we come down and we're ending up below 4,400, I would want to lock in a good majority of the gain. The expectation is on a close below 4,400. And this is the exact same stuff you heard me say at the beginning of the day. Below 4,400, we are likely going to come back down to center mass of the indecision candle in yesterday's market. Okay, if we close closer to the highs, don't expect necessarily a straight move up. We probably will have a pause, indecision, maybe a bull flag, which would involve several bars down, several hourly bars down, modestly. And then a continuation up Sunday night, Monday morning would be the expectation if we close close to the highs. Okay, so there you have it. And now there's a few questions that have come in and some comments. So I'm just going to address that. So bear with me for a second here to just get them teed up properly. So Peggy, we're going to answer your question now. Do I ever use trailing stops either for short or long-term trades? I like to be completely discretionary and literally manually manage it. If I'm doing overnight trading, I almost always will have a disaster stop in to protect myself. And how do you do stops? Just toggle on the bracket order, bottom right side of your execution panel. Execution panel is openable, right? You can just collapse it and you can then expand it. It's that little icon on the top right-hand side of the chart. And then once you've got the bracket order set up, you can have simple bracket, you can have a trail, and you can have, multi-bracket, you can have the take profit, however you see fit, it can all be there. And there is a section here where you can set up a strategy, right? So you can actually set up a strategy. Now, I'm not an expert at this, so I'm going to have to refer you to our live support team, which are experts on the platform, experts on execution. So I would go to the live support, right after this session, and get your teeth into different types of order execution, stops and exits, because I've never tried I'm almost 100% sure you can set that strategy with ATR as you're looking for it, but I've never done it, so I'll just be fumbling the ball in front of you. But those gents, and they know what they're doing with order type. So that's the best place that I would suggest you go to get your answer there. Okay, so that's that. And let me just see what you're saying here. Bart, you've been messing around with 10-second time frames as well. Nice. Well, that's good. I'm glad to hear it. Yes, the green tea caffeine will be better, especially with working with 10-second charts. Okay, M, what are you saying here? Let me just read what you said. I hear what you're saying. Look, as long as you've got your methodology and your end of week kind of routine set up so that you're coming in fresh in a way that allows you to be neutral, not feel good, not feel bad, but be neutral on Monday. Amazing, amazing. And Christian, you're asking, when you execute an order on FFF, whether it's a buy or sell, do you get a screen popping out requiring confirmation? There's a little tick off box that you can eliminate the confirmation, the need for confirmation. So I think it might be here, Christian. I'm not 100% sure. Yeah, trade confirmations right there. So go to the top right of the execution panel, just the little toggle buttons right over there, and just toggle it so it says off, right? Trade confirmation off, and that should take care of it. If not, please go to the live support group because they will definitely help you with it. Okay. And Chandra, you're asking, is your strategy momentum or breakout trading? Yes, and a lot of other strategies as well. I'm just trying to find pockets of higher probability for price to move through. That might be a momentum-based strategy that is just retracing, not breaking out above local highs necessarily, but retracing up to the highs. Might be breaking out to the highs. Might be the other way around. What I like is to find the highest probability pattern setups that I can, like I did at the beginning of this Q&A part of the morning. If you were here, Chandra, you saw me take on long on the ES on the backs of the PTC pattern. It's a high probability pattern. I did it on the ES, right? Where you saw the oscillating signals. I explained what the setup is, had the double green dots, took the trade, and I exited right where it effectively has turned, right? I understood that there was local resistance in that area, and I'd made $140 odd of profit on a one contract long, and I was happy with that, so I took it. Now, there is an option for it to resume, and it might be happening right here. I want to stress that the backdrop from any strategy that I use is signal alignment across time frames. So high probability patterns on shorter term time frames to execute, like the 5-minute or 1-minute chart. But the backdrop has to be supportive. So for me, higher probability trades exist when the 1-hour chart and the 5-minute chart have at minimum on the surface of the chart the same signal. They might be in a different stage of the move, right? But they have the same signal, and that certainly goes a long way to improving the odds of success. So there you have it. I think that exhausts the questions that came into the chat. If there are any that I missed, please bring them back up to me, and I'm happy to address them. Otherwise, we're gonna start saying bye for the balance of the day. Now, I will be on Wealth Charts at 12 p.m. Eastern time. For those who want to join me there, you're welcome to. We'll do a little roundup, a little Q&A, any applicable trading as well. For folks that I'm not going to see for the rest of the day, look, I hope you have an incredible rest of your day and an amazing weekend. And I look very much forward to jumping back on the horse with you and doing it all over again next week. It was a good week, strong week, up on the week, and very happy with the results on gold and silver. And of course, very happy with our trading strategies during the week. And I'm also exceptionally happy with the engagement. Like, people are coming back. And you're welcome, Christian B, on that coupon code. Yeah, so that's good. For the folks who want to use it, the coupon code is ZIAD, right? So I'm glad that worked for you. That's good, Christian B. That's good. And Dan, you can find it in the education section on Wealth Charts, right? Just go to hamburger menu, go over to education, go to Wealth Charts events, and you'll find it there. Okay. My pleasure, Dan. You too, Fuad. You too, Tom. You're welcome, Jeff. And to everyone that's writing in right now. See you, Rodney. I hope you and family have a great weekend. Thanks, Yvonne. Appreciate it. All right, folks. I'm going to say bye now. I really do hope that folks have a wonderful rest of your day. And Anthony, wow, that's a big that's a big comment in the chat. You've got lots of questions. Let's see if I can actually answer them before I bug out here. So I already put my thoughts out on the NQES in terms of directionality already. I hope you caught it, because I'm not going to repeat it all. And yeah, everyone has their own style. I don't trade oil very often, but I'm glad that you like the room, and I'm glad that it's happening. Concerning FFF, what are the benefits of picking it? Best package. So amazing deal. amazing team. They have money to pay out, and they're very responsive. So if you wanna jump in with them, hey Nelson, congratulations, my friend. That is something to celebrate. You pass an eval, definitely feel good about that and build on it, right? So Anthony, here it is. If you wanted it, if you need me to bring it up, I'll bring it up again. But here it is somewhere. I have it somewhere. Yeah, there it is. So yeah, you can go to, there it is. So you can go to fundedfuturesfamily.com, set up your account, log in, go in and check out the different types of plans that they have. And then the coupon is my first name. Okay. So you can go there. You'll go to the dashboard once you've set your account up, click on Get Funded, and then you'll get your dashboard up over there with the options on the different accounts, and then select what makes sense to you. Right, off you go. And then if you apply the coupon code, you get a whack-a-mole of a discount. So there you go. All right. And David H., if you review the plans before you log in, you can toggle between. Oh, yeah. So right on the home page, you can review the plans as well. So that's a good point, David H. You don't need, you can actually review the plans without setting up an account. So you can do that right up front. Absolutely. Absolutely. I don't know. I hope to keep it for a while, but I don't know, Jacqueline. So I don't have a good answer for you right now. But I will always do my best to take care of everyone here. We will always do our best as a team on Wealth Charts and the Active Trader Room to always take care of you in one way, shape, or form. So don't feel stressed about it at all. Right? It's there. If you want to use it, use it. All right. Hey, thank you for that compliment. I appreciate that, Jacqueline. All right, folks. That's it for me. Thank you very much for taking the time to be here with me each day. I hope you have a wonderful rest of your day and a wonderful weekend if I don't get to see you again for the balance of the day. So take great care with your decisions as you move through the balance of the day. We're retracing. It's happening live in front of you. We got above 781. We're continuing to rise exactly as expected. And I hope folks are taking advantage of it. All right, folks, that's it for me. Have a lovely, wonderful rest of your day. And again, a big thanks for being the best student family in the world. Bye for now, all.